Okay, good afternoon. Good afternoon, everybody. Welcome to Paul's Monday Market Update number 232 for Monday, 27th of July, 2026. I hope you're all well. Hope you've had a good weekend. Hope you're ready for what is likely to be one of the kind of biggest weeks of the year before everybody loses interest and goes on holiday. Okay. If you're joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you over the next 30 minutes, looking at strength and weakness within the FX indices and commodities markets. I look at a few relevant charts of interest that might be of interest to yourselves, and then I look at the live markets. It is not a signal service. It's not trade recommendations. It's just me sharing with you what I'm looking at, which might actually be of use or interest to yourself in your own trading and investing endeavors. Boom, 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 boom. Okay, so here we are now. Yeah, this is one of my other platforms. Okay, and this is set up for kind of indices, commodities. So here we have Dow on the weekly, Nasdaq on the weekly, S&P 500 on the weekly, Russell on the weekly, FTSE on the weekly, Nikkei on the weekly, DAX on the weekly, oil on the weekly. Okay, so we can look at oil very, very quickly. We've just looked at Chevron. Hey presto, doesn't the weekly chart on oil just look exactly like the weekly chart on Chevron? What a shocker, eh? What an absolute shocker. But there, as you can see, all right, from where we closed last week, okay, to where we've opened, all right, you can see that basically we had quite a move there. I've just gone down to the 30-minute chart there. It kind of has a nice, sort of look at that. Thursday, we top out with a nice bearish engulfing, bearish key reversal candle. We'll just work our way lower and lower and lower, and then gap down, okay, and then continue to sort of move our way lower. This morning, that I would be saying that is a kind of an indication that the kinetic is over for the moment. But how many times have we said that this year, ladies and gentlemen? But there we go. That's oil and Chevron. What I'm kind of probably interested in is based on the fact that we've just looked at mags, those some of those stocks as well. What's going on with the actual overall Nasdaq index. And let's zoom in here on the weekly chart. We had that fantastic run, didn't we? Have that fantastic run followed by what I would view as we talked about this, a double top that had basically a bearish engulfing candle key reversal followed by another bearish candle key reversal. Looking at kind of around about sort of 29,000, sort of almost like neckline, which over the last couple of weeks we have now worked our way lower on. All right, so once again, I'm going to be fascinated to see how is this by the end of the week. Okay, is this just a liquidity grab before the numbers supporters are on a move higher? I have no doubt that President Trump and many others would love that, but the reality is, I'm just going to have to wait and see how the price plays out. The thing that interests me is here, if I go down to the daily chart, if you look at that for almost the last 2 months, the Nasdaq daily chart has been pretty challenging. And the thing for me is that we flipped the 50, right? We've flipped the daily 50. See how it's gone from being support to then being resistance for us moving lower. Now, of course, every man and his dog is loving not only the kind of Mag 7, but also tech stocks, AI stocks, okay? And they're all getting a little bit het up because, not many of them are following through, or lots of them have fallen away. And it's no surprise, okay? It's a very simple rule of thumb. If you want to be, buying tech stocks, well, being above the daily 50 is probably a good starting place in terms of understanding context. And when we are here and drifting lower, that's no surprise that perhaps maybe we're seeing some of the kind of the dreariness in all of those kind of tech stocks. S&P 500 isn't as bad, all right, in terms of Nasdaq hasn't fallen its way through, but once again we did have that engulfing candle, and we're kind of making sort of swinging kind of lower highs there, okay, that kind of levels we're seeing there, and it's a case of we are kind of drifting away, right? And once again, we at the end of last week we finally had a close beneath the daily 50. Now, of course, we've bumped today. Is that a case of where are we going to be at the end of this week? Are we going to be nicely above the daily 50 and daily 20? To me, that's bullish. Or are we, back beneath that 50? Okay, which I would say is pretty bearish going into the sort of, August summer breaks for myself. All right, and that's what we're just seeing there across those. A little bit close to home. All right, DAX has, you've heard me talk about this all year, namely how every time it's got above 25,000, it's kind of struggled to stay there. I thought that spell had been broken a few weeks ago when we powered our way north, but you can see we came back down. But relief rally has bumped us up, hasn't it? A relief rally is a little bumped up. Look at that today and stuff, and just look at that on the daily chart here for the last couple of weeks, where we have literally just pivoted around 25,000, sort of back and forth, right, around the kind of moving average, around that big number. And once again, is this a case of, the spell is broken, or are we going to pop up, double top and come down, okay, into August? Once again, as I said, we'll be interested to see, where this is at the end of this week. All right. So, as I said, I'm kind of more curious about charts again on Friday than I am today. And also closer to home, all right, FTSE. Now, I talked about how I thought we were coiling up on the FTSE there. We have managed to break out of it. We have managed to stay above the weekly 20 and the weekly 50. We managed to be in Stan 1 Bravo. I wouldn't exactly say that is just filling me with absolute joy, but then there's a case of I've no doubt that Mr. Burnham will try and claim the sort of the benefits for that, but the reality is that you've got energy and defence stocks making up an awful lot of the FTSE. You've also got sterling weakening a little bit as well. So I think it's more to do with that rather than any renewed vigour in the FTSE due to domestic politics. As I said, we'll have a look at gold. Bang, we talked about this a few weeks ago. Gold weekly chart. Here we are down at 4,000. I see 4,000 still acting as the kind of big round number there. Solid support. Can it base itself there? Well, I think part of that is to do with whether we get some dollar weakness. All right. Well, why would we get dollar weakness? Well, you'd get kind of dollar weakness if you're going to get, if you're going to get bonds rising, okay, yields dropping, and the likes, okay, that will have an impact on also that kind of a bit of the sort of risk on sentiment if that can hold that. But and then of course Mr. Varsh's comments. So, but yeah, look at that. The weekly chart. I think we just sat at 4,000, right? You can see on the daily chart there. Okay, the question is, is there, what is going to likely to happen that will basically either pump gold back up above that 50 and above 4,200, or what is it that could break that 4,000? I don't think it's anything to do with gold. It's stuff going on elsewhere. All right, stuff going on elsewhere. And in particular, I think kind of maybe the treasuries markets, okay, and the Japanese bond markets that may be the driver of that when it comes to gold. Silver has also been a kind of a little bit of a drift lower, whereas gold has been sat on 4,000. Personally, I see silver now. We are kind of tucked underneath $60. That's the way I look at us there. We kind of did flush to a little bit of a low here from last month, and we popped our way up. All right, I see that we are beneath 60. My view is that if there is another peace deal, all right, another peace deal, another week, another peace deal. If that happens, well, then that's seen as good for silver because it's got industrial usage, so that kind of works our way higher, right? But if we go back kinetic again, I think actually silver works its way lower there. So that's what I'll be looking at there. And then Bitcoin on the weekly chart. I said it's gone Stan 2 Bravo, and we've talked about this for the last couple of months. How we have been in a downtrend for this year, but 60,000 and the weekly 200 period moving average has acted as pretty solid support again. Yeah, you might say, well, Paul, those candles aren't exactly filling me with immense joy and strength and momentum, and I'd agree with you there. But the fact that we kind of seem to have based at 60, all right, holding above the 200, that to me is that's worthy of consideration. When I go to the daily chart, okay, we start here the month here with a really nice bullish engulfing, bullish key reversal candle. We then PO20'd, right? Whereas the 20 was acting as resistance here. See how it's acting as dynamic resistance there? It's then turned into dynamic support. 20's gone flat, 20's turned up, 20's bounced off it. And so far, we are now, price is above the 20, which is above the 50. So is this, as I said, just a slow work higher, okay, from Bitcoin? Hence why, I might be interested in this at the moment.